Okay, so we're looking at Plum today. They're looking to raise 1 million. 7 days left. They've already raised 786,000 in maybe 5-6 hours. They've already got 2,300 investors. This is a convertible round, so that means it has to hit a certain price. But we'll go into that. I've been granted access, but I'm going to have a look at some of these things. Make sure to stay tuned. I'm going to be giving my insights and analysis as we go along. So it's a smart money app, it's like a fintech app, makes wealth automation automatic they've got 1.4 million users, which is amazing. Since the last crowdfund, they've launched in 6 markets and they've 1.5x their customer base. They've delivered stock and crypto investing and delivered a new debit card and secured 5 million from additional funding from Silicon Valley Bank UK. Now they want to accelerate the growth in Europe. So 1.3 billion set aside, saved and invested by this amount of users, which is pretty good. I don't know what that equates to. Is that 10,000 each, maybe? Something like that. Expanding to 9 European countries. Here they're saying 6, so maybe they might have already been in 3. So they're now live in 10. A little bit confusing, but okay. So maybe they started 1, then they had 3 or 4, and they've added an additional 6 to be live in 10, possibly. Anyway, they've grown to 1.4 million users, which is actually a lot. It's quite a lot. I invest in other fintechs, and I think this might be the biggest that I've invested in. There are biggers. Revolut and Monzo are big in the UK. Obviously, PayPal and Stripe are massive in the US. But this is like an all-encompassing wealth tech platform. The only thing that I can think of that's similar to this is maybe Lumio or Moneybox. I think Moneybox has less than 1 million users, so it's kind of interesting. They've actually raised 33 million. That's probably part of it, including from DMG Ventures and Global Brain. Let's have a quick look. They've got this video. If you don't want to watch this video, then stay tuned to my video, this YouTube video, and skip through. But it's 1 minute, 30-second video. I'm going to stop and start where if I can add any insight. Uh, 43%. I guess the 43% is the assets and the management. Got a Visa card. By the way, banks don't always make that much from Visa debit cards. I know I used to work for a bank. I now work for WhatsApp. If you don't know me already, that's where I work at the moment. But I used to work for Barclays and NatWest. It's quite good for stickiness, though. It kind of keeps customers if you have a debit card. So maybe they're using it. It's kind of a loss leader typically, but it's still cool they've launched it. It kind of shows they're becoming, a more established bank. All right, so this is shares, I guess. Yeah. Okay, so like funds as well, I guess. That looks like a fund. There you go. Cryptos, which I at the moment don't invest in. Anyway, it's nice to have some coverage if you're you like equities, both public and private, like this. Then you can get some exposure to crypto without having to trade it yourself. So I think that's kind of interesting. So these are the countries. Oh, whoopsies. Let's have a quick look. Let's go back. So you got Ireland, the UK, France, Germany. What is that? The Netherlands? I think Spain, Portugal, Italy. Oh, I think that's Japan, and I'm not sure what that other country is. If you know, let me know in the comment section below, of course. 10 countries. Good to be multinational. Brings with it some linguistic and logistical issues, but as a startup and as software is scalable, hopefully they can manage that. Okay. Okay, well, let's just wind this back a little bit. Where are we now? We are wherever we are. I can't see because this Zoom thing is in the way. But 120, and they're saying they can double. Let's just look at the countries just for a moment. This is stick with me, guys, here because it's going to be important, right? We've already seen they got cryptocurrencies. Just stick with me, right? This is important. So they're saying they can double their membership. They've got 1.4 million people. But if we think about this, Portugal's got about 10 million people. Spain, I'm not quite sure, 30, 40 million people. The UK's got 66 million people. Probably these countries themselves, Germany's got quite a big population, maybe 70 million. Netherlands is quite big as well, maybe, I don't know, 20. There's easily over 130 million just from those countries. Japan is very populated. If they are in Japan, I think it's 100 million there, maybe. So they've got a massive base to go after. I think that they're not capturing as many people as they could in these chosen markets. The fact they want to go to other countries is kind of interesting. Maybe let's keep watching and see what they say in their investment deck. Let's go back to 120. Yeah. Okay, let's have a look at their deck. Well, first, let's just see what else they got. So they've already mentioned they've grown, assets under management 43%. They've grown the user base to 1.4 million. They're in nine countries. They keep saying different numbers here. It's a little bit confusing. There you go. This is what I said. Over 200 million. It's 228 million. So they should be able to get quite a lot of growth just from those markets. I'd be surprised if they couldn't get up to, 10 million people from those markets. Oh, I do invest in a bigger fintech. Actually, I invest in Wirex. I think that has 7 or 8 million users. Anyway, diversified income streams are underpinned by healthy, steady flow of subscription revenues. Launched new products in 2020, including commission-free stock trading, crypto trading, debit card. I imagine they take a margin from the stock investing. I imagine they take a margin from cryptos, and the debit fees, I imagine, I reckon it's a loss leader. They probably don't make much money from the debit card, but anyway, they've got good brand awareness. I have seen their advertisements in London. They did some out-of-home advertisements, posters on the tube and rail stations like King's Cross and places like that. Again, they're backed by this bank. So he used to work for Wise, which was previously called TransferWise, which was a growth company. He launched it in 25 markets. He's also a trader, Morgan Stanley. Went to Harvard, so he's a bit of a hot shot. Got an MBA, and they got good members of their board. It looks like Bumble, blah 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 blah. So growth companies. Now let's take a quick look at the deck. I think they've given me access to this deck. All right, bear with me. Here we go. All right, it's just linking me there. One sec. I think the deck is below. There it is. Okay. Right, I'm going to minimize me a little bit. Woo! Bear with me. Works or WhatsApp. Can't use anything like this. Plum, the ultimate smart money app. Let's just get this on present mode. There we go. Looks pretty cool. Money motivated, helping people to invest. It's like a lot of these fintechs, to be honest. I'm an investor, by the way, already in Plum. So I want to see if I can hide this thing. 1 second. I didn't mean to do that. Give me a moment. There we go. All right, so they've gone from 100,000 users. Wow, that's annoying. My computer's frozen, and let's just restore this. Let's get back into it. Apologies, folks. What a terrible thing to happen. Anywho, they've gone from 100,000 users to 300,000, and they've doubled in 2020, and they've almost doubled in 2021, and they've grown about 30% in the last 9 months. So growth has slowed, although it's still pretty good. You know, from 2019 to 2020, they grew 300,000 users. From here, they grew another 500,000. 2021 was a really massive growth year from them. And growth has slowed actually in the last 9 months to 300,000, unless they grow the most in Q4. Don't know. They've still got a quarter to go. So, you know, if they're trending at 300,000, so it's about 100,000 a quarter, they'll probably get to 400,000 by the end of this year. And of course, maybe they, you know, didn't have as much money this year, so they're raising now. Anywho, let's not read too much into that. So this is the expansion they talked about. They're growing fast. Problem we're solving. Like automated wealth investing or wealth tech is not new. So they do have competitors. So I wonder if they're going to mention them in this space, because a lot of people are kind of vying for this kind of fintech, wealth tech kind of customer. They connect to the bank, which is open banking, which now kind of nowadays everyone's doing this. So every fintech, every wealth tech, even every bank is looking, you know, is doing a bit of open banking. It's called PSD2 is the banking regulations if you want to read about it. So they're targeting 25 to 45-year-olds, people like me, you know, and people that want to invest and save continuously. Again, people like me. Look at this. This is probably the average. People that maybe save or invest 10, 15, 20K, whatever. Fine. Auto savings, tailoring the budget. So a lot of people do this. Starling, you know, and Monzo, and a lot of the fintechs do this, as well as the wealth tech companies like Lumio, Plum, Moneybox. And I think even the crypto apps are looking to kind of develop a little bit into more of like a fintech. So that's the Wirexes of this world and etc. But they're calling it the best. They've got a best in class interest bearing product, so like almost like banking. They've got auto investing. They've got cryptocurrencies. This is good. So they do have this cool kind of stuff. I think it's Plum that have this kind of auto investing, like saving money when it rains. They call it the rainy day fund. I think that's what Plum do. That's pretty good. Market dynamics. There's a lot of like sort of saying 101 billion is the EU retail wealth management market revenue. 15 million of that is the UK. The wealth opportunity is 116. Insurance and lending opportunity. So yeah, this is really interesting because lending is a massive industry, and so is insurance. And it's interesting they've got this on their radar, because that is a massive pie to go after, and I think that's a smart move. I'm always kind of thinking that fintechs might go into lending, or kind of other ancillary products like mortgages, and if they can, yeah, it'd be massive. That's kind of interesting. They put it in there. And it might be why they want to do debit cards, because typically like customers will trust, they wouldn't get a mortgage from, they're unlikely to get the vast majority of people are unlikely to get a mortgage from a company that doesn't have a debit card. It's just kind of the way it works. I do, because, you know, I'm an investor and I understand numbers, but a lot of people want to go to a retail bank or a quasi retail bank, someone that's got a debit card, got a bank account, etc. So that's interesting, right? Driven by strong secular demand, 0% of 8% loss in returns on savings accounts because banks aren't offering it. Retail investors, everyone wants to trade. This was not like this when I started investing. I started investing in 2007. I was considered strange. I can't underline that like strongly enough. Now everybody wants to invest, literally. I don't know what's changed really. I'm not sure. But anyway, maybe it was the FIRE movement in the United States maybe changed it. Millennials care where the money goes. They want to direct their own investments, again, which is completely new. When I was in my 20s, no one had even heard of investing, let alone knew what to do with their money. Now there are apps dedicated targeting people in their 20s like Plum. And there's this huge wealth transfer, which unfortunately I'm not going to get. But a lot of people will, you know, double parents, families who might sell their assets and give it to their kids. If you are lucky enough to be in a double parent family and don't have a lot of siblings and have lived, and your parents have lived in a capital city in one of the big nations, international capital cities like London, Sydney, New York, the big cities in California, you may inherit a lot of money. So this wealth transfer is going to go to millennials and to Gen Z in the next kind of 20, years or something, and they're going to need to do something with the money. And I agree with him. You know, this is not just Plum saying this. A lot of people are talking about this big wealth transfer. So yeah, I do think that's going to happen, and it might go into things like Plum. So yeah, it's interesting business proposition. Let's have a look at this. Okie dokie. Right, so this is the number of onboarded users. K, what's K? K, is that customers? Or is that thousand? That's thousands, I guess. Right, so they're growing the most in the UK, which makes sense. They do well from my perspective. I've seen their advertisements in the UK. So it looks like the EU, they haven't really grown that much. Still, they've got a lot of customers. It's a little bit confusing. It's at thousands. So that's like 2.9 million. Oh, these are the forecasts. My bad. Sorry, I'm not feeling that well today. I'm not working for WhatsApp today. Taking the day off to not feeling that well, so I'm not as sharp. Apologies. Okay, so 2023 is the forecast, right? They've only got 250,000 from the EU. The rest has come from the UK, right? Someone's calling me. Go away. Sorry. In 2023, they were hoping to get nearly 1 million users from the EU and then 1.9 million. This is quite aggressive. Are they going to hit this? Maybe. The cost per acquisition for generating results in the EU is typically cheaper than the UK. So they actually need to raise less money, but operations cost more, customer service costs more. They have to translate everything. You know, if they want to go to a lot of countries, guess what? They have to translate. And I know this. I work for WhatsApp globally. We do multilingual campaigns. I'm in charge of global advertising for WhatsApp for Business, and I know this like the back of my hand. So the more countries they go to, the harder it actually is, unless there's a common language. So they may try and go to market in English potentially, but that brings through it problems as well. So every country, they're going to need a solid team, customer service, sales enablement, maybe not sales enablement, but certainly customer service. I know that one of my housemates or ex-housemates at the house I own in East London, he works for Moneybox in their customer service, in the customer services team. And I know there's a big team. And he works, I think, in the pensions team. So like each team is going to have customer service, crypto, pensions, the funds, the stocks. And you're probably going to need that for each country. You know, they may have some multilingual people, but yeah, the operations are going to need to scale. So it's all good saying they're going to make, you know, from 2023 to 2024, they're going to get another 1 million customers in the EU. But the operational costs are going to zoom. So I'm kind of be interested to see that. Let's look at the run rate, annual recurring revenue on the flip side, on the other side of the PowerPoint deck. So what we got here, 2024, the customers are going to double, but they're saying the annual recurring revenue is going to more than triple, right? From 4.3 to 13.8. And overall revenue is going to go up like 90%. Okay, yeah, gross revenue, yeah. So I'll be interested to see what they're factoring for net. This does look pretty positive though, like overall. I'd like to see, and sometimes in these investment decks, they don't give you the mechanics of how they're actually going to do it. I think they should, because anyone can spit out a forecast. You know, I could do a forecast like this in a few hours. And a deck like this, you know, with a designer, give me 3 hours, and I could probably do it. Lifetime amount saved. Plum has already helped save people 1.5 billion. Okay. It's kind of neither here nor there in terms of an investment deck, but okay. I suppose 1.5 million over 1.4 million people. Is that 10,000 per person? I don't know the figures. Maybe someone keep me honest in the comment section. Maybe we'll do it later on. It's probably 10K a person. They've got a subscription model. This is interesting. We can look at the revenue streams now, right? Subscriptions, they've got Plus, Pro, Ultra, Premium, ranging from £1 a month to £10 a month. Tailored offering for each plan. And they've just launched Premium. 30% of active users pay recurring monthly subscription fees. That's pretty impressive. I know that I actually pay my bank. Sometimes I go overdrawn when I do these investments. I just what you know. Sometimes they're timely. You know, there's 7 days to invest in this round, and cash flow. You know, cash flow is king. And I give my bank a lot of money per month. So you know, this is not an app. This is not a bank at the moment, but it's an investment platform. And if they offer commission-free investing, I have to pay commissions when I do stock trading. It's £10 to buy or £10 to sell, and if they do commission free, it looks more attractive to a lot of people, even though they're probably taking it in the spread. The difference between the buy and sell price in the market, most retail customers won't understand that. And it's probably profitable for Plum to have commission free because of the spread that they probably add, or the bulk buying. There'll be a way for them to make money off that. Anyway, let's look at the other stuff. Management fees, margin earned on assets under management. So they make a margin on assets under management. That's interesting. I don't know if that is based on just the spreads, or do they hold the assets under management as well as like invest on behalf and take a spread that way? That's kind of interesting. So it's a stable and growing source of income as customers' wealth compounds over time. They need to keep the customer sticky. So that's where customer service has to be really, really high for them, because if it's not, people will leave and their assets under management will go south. So they need to make sure that they have really strong UX, UI, and customer services. Traditional fees, transactional fees, cyclical income from stock trading, crypto, and card usage. So that's some fees, transaction fees. So increase via continued rollout of offering. Okay. I don't know how that works with the subscriptions. I'm not going to look at like the product info in this video, but I may do in the future. All right, here we go. So we've got something on strategy, which is cool. Plum strategy, build the #1 position in each existing market. That's not a strategy, that's a goal. Anyway, continue rollout into additional markets. Again, that's a goal. Continue to enhance offering to ensure outsized competitive advantage. That could kind of move over into a strategy. Gain clear market leadership over time. Yeah, I get that's very fluffy. Not sure about that. The competition is several months away from international expansion, giving Plum a significant advantage. It's interesting to see how many I invest in these. I invest in Chip, Moneybox, Plum. Free Trade I was considering, actually. I don't think I have. Probably should. I might have something in Emma as well, potentially. And the UK pan-European apps, Plum will be next to Revolut. It's interesting. It's interesting the others have waited. I know Moneybox has waited. I'm not quite sure. I do think there is potential to go. It's interesting to see about this first mover advantage versus kind of waiting and getting bigger in one market. I suppose this narrative will play out over time, and we'll see who's kind of winning based on this. It might be that the first mover advantage is very strong. Once you get someone to invest a couple of $1,000, euros, pounds, whatever, then they stick with you. I know that I've got a lot of my money in terms of one of these WealthTech apps. I've got most of my money is in Moneybox. I've got Plum. I haven't used them, so maybe it is based on one of the apps you use. It's probably a bit more defined and nuanced than that. Maybe some millennials and younger millennials have money in lots of different companies. Let's see what else they got. So, stood out during a tough economic landscape. Average monthly worldwide customer downloads: Plum, Snoop, Moneybox, Emma, Shares, Free Trade, Chip, Lightyear, and Nutmeg. So saying Plum was downloaded the most. Monzo, well, if you look at all these, Revolut was huge, 1.2 million. Is that monthly? That's kind of crazy. Monzo 215, Starling 118. So the fintech banks are they're mopping up a lot of these users. But anyway, the value is actually in the wealth anyway. The wealth and lending is where these companies will make the most money. Monzo's losing money. I think they lost 200 million last year, or maybe this year, but they're losing lots and lots of money. I think Revolut might be the same. I'm not sure about Starling. But I think this spectrum, Plum, Moneybox, Free Trade, Chip, I imagine all of these are probably, if not profitable, maybe close to profitability. But with scale, Revolut, Monzo, etc., they might be able to, I'm sure they can make money in smarter ways. But yeah, anyway. the user base for Plum, building for a mass market mindset towards money. The mainstream customer does not want to manage their money. They want to do it in an automated way. That's probably true. Closer look at the user base. So the majority of the user base are young. 75% are between 18 and 34. That makes sense. And then the rest is a bit older. It's interesting they've got people that are over 55. I wonder if that's parents. Maybe someone that's 60 who's got a 21-year-old or 25-year-old kid saying, Mom, I use this app. It's quite cool. Gender, it's interesting, it's more women than men. I kind of thought it would be more men. That's kind of interesting. And, they've got a big user base now. So this is not insignificant numbers. This is over 1 million people. They've got nearly 1.5 million annual gross income. So, so the vast majority are kind of lower earners, either part-time or less than 22,000, which is well below the UK average, by the way. I think the UK average might be 30,000, maybe 40,000. But it looks like maybe, 8% maybe, a 50K plus are the high earners, and another maybe 25%, I don't know, maybe 15% maybe are moderate earners, 30 to 50,000. So overall, it's interesting. They've got a bit of a blend. They'll obviously make more money from the higher earners, but the volume seems to come from the lower earners. And of course, these earners, this 50% of people, are going to earn more money in like 5-10 years time. There could be mums, there could be part-timers that are working parents, for example. There could be younger people that could not have maybe found their career kind of trajectory just yet, but 10 years from now they could easily move up in the earnings. So they could go from kind of 22 to 30, and then from 30 to 40, 50, and of course with inflation as well, all of these things are going to increase. I think investable funds, just in the short term, I think will go up over the next 5 to 10 years. Anyway, so they've got some like case studies here. I'm not going to read these. What we've delivered on, the stock stuff, they're live in 10 countries. They've got premium, the debit card, crypto. We've got an ISA manager. I've mentioned this already. The number of stock investors, they haven't given the number. I think maybe it's small, but it's less than a year. But it's growing 42% month on month. Interesting what happens when, if and when the stock market completely collapses. I think it looks like it's going to at some point soon. One of the reasons I like investing in angel investments is you don't have to look at the price very often, because you don't get given the price that often. Anyway, the debit card is growing at 40% as well. So again, these looks like they may be small numbers, but still, that does look promising. They're live in 10 countries. Organics. They're doing this organically. That's interesting. That is interesting, but they're not doing any paid media for this. That's fascinating. I can't believe they're not doing anything paid to get 120,000 users. It's amazing if they are. I mean, they should really be doing paid media if they're, if they're getting £10 a month. Depending on the profit they would get from each customer, they should consider paid media. Most advanced plan is £10 a month, selection of 1,000 stocks, 21 funds, new asset classes, priority customer support. I can't remember if it's Plum that offers like investing in art as well. Not sure. But they've got real estate. They've got, I think these are funds as well. Yes, they've got real estate, natural resources, commodities, etc. They've got 160 employees. Look like they've got a decent team. AIG, Funding Circle. Good. 3 offices. Where's Nicosia? Never heard of it. Anyway, London, Athens is in Greece. It's interesting to have an office in Greece. Yes, they've got good companies there. Revolut, Deliveroo. Growth plan. This is what I like to see. So they're expected that Europe's going to take over the UK. That kind of makes sense because they've got more countries. So they think the revenues opportunity is 7 times larger. Then they want to refine their products. Auto investing, and UK and EU stock offering. Cool. Here we go. Growth in Europe provides a clear path to 25 million in revenues and EBITDA break even. So not profitable, but break even in 2024, which is circa 1 year and 3 months from now. I guess that's the year end 2024. So it's like just over 2 years from now. So the annual recurring revenue for this year, 7.7 million, gross revenue 5.7. 95% of it is the UK. Gross profit is 4 million. That's really good. Just shows how profitable they are. They've got EBITDA loss of 10 million. I wonder if that's just because I would imagine it's this growth thing that they're expanding so many countries. They probably have to pay lots of costs, all sorts of costs to expand into other countries. 2023, ARR goes up to 17 mil. Gross revenue is 12 million. Gross profit's 10, so they're making like 70% margins, which is pretty good. But they're still losing 9 million. Then 2024, they expect to have revenues of 32 million, with only 64% of that revenue coming from the UK, the rest coming from the EU, and some direct costs of 5 million. So they're going to have 20 million off 30 million, which is about 60% gross margin, which is still amazing if you think about it. So they're still not going to be profitable, but they're getting closer. And then they're going to go with 52 million. They think they're going to make 52 in annual recurring revenue in just less than 3 years' time, about 3 years' time. But depending on when they report their earnings, maybe 3.5 years or whatever. And they're going to be making 9 mil of EBITDA, which would value them, let's say they're valued at 20x. EBITDA would be 200 million. So let's see. Let's have a quick deep dive into this, right? So they're at 4 at the moment. They might reach 7. They're not telling us. It's kind of the budget. They haven't said if they're on target or not for that. You'd assume that they're not. Who knows? They've raised a lot of money and they're looking to raise more here through Crowdcube. The forecast is to make another 10 million next year, 20% of which comes from the EU. Yeah. I'd love to see like a deeper dive into the EU strategy. Which countries, how are they going to do it with all languages? What are these direct costs? 5 million or 2.8 million in 2023. It only doubles, to be fair. It only doubles, whereas revenue kind of more than doubles, goes up 158%, whereas costs go up 100%. It's quite hard to tell if they're going to be able to do this. They've got refer a friend, which is good. They've raised 45 million. There is a risk that this fundraising actually goes down, over the coming years. People might say, well, you need to get to profitability quicker. But maybe the backers are thinking, no, they should grow and should reinvest in growth, for 5 years, along with this plan here, right? And just grow until like 2025. They're willing to fund it. If you think of the losses here, this year's going to be 10, next year's going to be 10, let's say, and then another 2 million losses there. So you're talking 22 million they need to raise to get to this. Whereas another 8 million there. So if the revenue's off, it's basically 30 million they need to raise minimum, 30 million pounds, that is. I think they did raise 30 million recently from VCs. And this is like the angel investment stuff is just a top up. It's also a way to scale their customer acquisition as well. Okay, more and more people are trusting Plum. Yeah, okay, that's cool. We're on the way to being the best place to do this. Okay, join us on the mission, right? Okay, so I'm going to reload this page actually, because they did raise, they raised less than 800 a moment ago, when I started this video. So it is going up. 806, what is it now? 899. My God, they've raised 100,000, more than 100,000 in the last however long I've been making this video for. That's mad. And they are incredibly popular with investors. I think the first round I invested in, they had 10,000 investors, which is a lot, to be honest. And I just wanted to show you. The other round was at £24. I think this convertible exchanges at 34. So it'd be a 50% increase on the first round. We're going to have a look at some Q&As. I might do that in a separate video, actually, guys. If you like this video, actually, I'm going to stop sharing and give my opinion. Well done for sticking around this long. For those that know me, God, another phone call. I'm being pinged all over the place. But for those, let's turn on this light as well. For those that know me and know this channel, you know, I do focus quite a bit on robotics and investing in robotics, but I also quite like fintech. I think the margins are really high, as you can see, you know, between 60 and 70%. It's really high. And the economics are quite good. You know, if these guys can raise 30 million over 3 years, and if they can produce, you know, after that, roughly 10 million a year in annually recurring revenue, EBITDA, they can be valued at, you know, quite a good, healthy clip. I just want to quickly look to see what they're valued at now. Can't actually find that. That's frustrating. Just give me 1 second. 1 second. So I can see what the previous round was valued at. Just give me a second. They were valued at 91 million last time. 91 million pounds. That's quite a lot. They raised 6.5 million last time. Which was, when was that? That was this time last year, October, a year ago. They raised 6.5 million and they're valued at 91 million. If they hit the conversion price for these shares, it'll be 50% higher than that. So it'll be about 140 million they'll be valued at. And they're expected to earn 10 million, around 10 million, 10 million in 2025. So 3 years from now, a 20x valuation of the 9 million that they're expected to earn EBITDA, they'll be valued at 200 million. So it's still a pretty lofty valuation. It's interesting that they kind of, it feels like people are valuing these companies like more than 3 years in advance, because if they hit the conversion rate for this convertible rounds, they'll be valued at 140. But the 2025 20x price multiple of a PE or earnings of 9 million values them at 180 million, which is only about 40%, 30-40% above the current valuation, which, you know, for angel investing, it's not that high. You know, angel investors, people like me, you know, okay, I'm only small time, but like, I think most angel investors are looking for 10x, and they're not looking for 40%. Nevertheless, this is a growth company. It is growing numbers. It'd be interesting to see how they manage operationally, because, like I said, customer service, UI, UX, the whole customer experience end to end should be good and high quality, or they're going to lose customers and they're going to lose assets under management, and that would put the revenue model at risk, and that would in turn put the valuation at risk. So I would like to have seen a bit more about that. And if anyone in my, you know, subscriber base, current investor in Plum, or wants to do any more research on this, let us know what you think in the comment section below. I might do another video about Q&A and about the company itself, maybe in the future. I haven't invested that much in this company, I'll be completely honest, because my approach is to try to invest in more companies, and I kind of had more faith in Moneybox, to be honest, because I'm a user of Moneybox. But Plum does seem to be growing faster. So that's my opinion, that you know, if they can make sure to keep customer service good and keep attrition low. I'd also like to understand a bit more about how they plan to acquire customers, because it's good they got 120,000 people organically. Why aren't they doing paid media? You know, like, is it because they're worried that it's going to cost them a lot? But it seems like the lifetime value of these customers would be quite high. So I don't know why they're not doing paid media. And that's what I specialize in, and it's a massive growth factor. So that's a bit unusual. But anyway, I like it. I like the company. I'm personally not going to invest in this round because I think that it's quite a high valuation at the moment. I might live to regret this, of course. Everyone makes mistakes. I'm human. I will make mistakes in my life, you know. But I really like some of my other companies that I already invest in on the listed markets. I believe Tortilla Catebox, XP Leisure. There's a few UK stocks which I really like. Also, the robotic companies I think are valued quite low in terms of the market potential. Also, if you think about fintech versus banks, right? Like 3 years in the fintech world is quite a long time, but for banks, it's not a long time, and they have a lot of money as well. And I wouldn't be surprised if Barclays and NatWest and a lot of other companies start to really game up on their game. It does take them years to change, but they've had a couple of years to try and catch up with fintechs, and 3 years for them, they may catch on to these things. Whereas I don't think that's going to happen in the robotics space. I also don't think they can control quite a lot with IP. I've got loads of videos on my robotics investments and stocks that I'm interested in cover in the robotics space. And likewise for these restaurant stocks, I don't believe it's that easy to copy, whereas I think fintech is kind of easy to copy, easier than robotics companies and whatnot. But anyway, I still think this is a good company. If you're investing in this round, let me know in the comment section below. If you're already an investor from last year, let me know. I am. I've got a bit in this company. I'm happy with the amount that I've got in. I might consider investing next year, potentially. Guys, if you want to learn more about investing in angel investments, then let me know. Actually, you know what? Before I close off, let's just have another look just for fun to see how much they've raised. So it was 700. It was 899 about 3 minutes ago. Now it's 906. They've raised 7,000 in the last 2 minutes. So it looks like they're going to hit their target within one day. They might even raise as much as they did last time. Who knows? Anyway, if you want to learn more about fintech investing, angel investing, investing in startups, investing in listed companies, the ones I have a high opinion of, for example, check out my other videos. There'll be some video links somewhere soon. Knowledge is power, especially that kind of knowledge, and progress is everything, guys. See you in the next upcoming video. Take care.